Imagine this. The entire real estate market's been chaos for years. Mortgage rates skyrocketed, home sales froze, and every real estate stock seemed to be bleeding out. But suddenly, one company just flipped the script. Out of nowhere, Opendoor Technologies is up almost 15% in a single session. No breaking news, no big announcement, just a massive spike that caught almost everyone off guard. So what's really happening here? Is this the start of something real, or just another short-term pump that's going to fade away by tomorrow? Let's find out exactly what's driving this rally, what the data actually shows, and where Opendoor could be heading next. All right, let's get into it. Opendoor is up a strong 14.7%, trading between roughly $6.69 on the low side and $7.57 on the high, with insane volume for such an early part of the trading day. Over 35 million shares exchanged within the first 45 minutes of the session. To put that in perspective, the average daily volume is about 1.28 million shares. So yeah, something big is clearly going on here. And what's even more interesting, there's no new macroeconomic data released today. Instead, this move seems to be riding a broader wave of optimism across the entire market. Over the weekend, we got some positive signals about the government shutdown finally moving toward resolution. Once that's out of the way, we'll start getting back-to-back economic reports later this week. PPI, CPI, all those inflation metrics that could confirm whether the Fed has room to make a rate cut in December. That's what traders have been waiting for, and the market's clearly starting to price in that hope. Then you've got another wild card. Over the weekend, former President Donald Trump mentioned the idea of a new stimulus plan, something like $2,000 per person. Whether that ever happens or not, we all know the market loves hearing the word stimulus. It instantly injects optimism. So we've got a market that's in a good mood, and Opendoor just happens to be perfectly positioned to benefit from it. Now, a lot of people online are claiming that Opendoor's massive move today is the result of a short squeeze. But that's not actually true, at least not yet. The data shows short interest has actually gone up. At the time of recording this, shorts have increased by around 1.7 million shares. About 22.7% of the total free float is now shorted, which equals roughly 161.5 million shares overall. So instead of covering, shorts are doubling down, trying to push back against this rally. It's not working great for them right now, but technically this isn't a squeeze. That said, if Opendoor keeps holding these gains or even pushes higher into tomorrow, we could start seeing some real pressure that might force shorts to cover later this week. So if it's not a squeeze, what's driving the surge? Analysts. Over the weekend, a few analysts quietly updated their ratings, and that kind of move tends to trigger algorithmic buying at the open. We got one bearish note from KBW Ryan with a $2 sell rating, though his success rate sits around 31%. Then we got two bullish ones, JP Morgan's Day and Mizuho's Lloyd, both setting their price target at $8 per share. That's now the highest active target for Opendoor, and both of those analysts have decent track records, around 55% and 64% success rates. The previous 3-month average rating was $4.94, implying downside, but now with these new bullish calls, sentiment has started to shift upward fast. And here's what could happen next. A lot of analysts haven't updated their price targets for Opendoor in months. Some 8 months ago, some 4. So if they start revisiting their numbers because of this new momentum, we could easily see more high single or even double-digit price targets come in. And that's the kind of stuff that pulls in big institutions and algo systems that follow rating trends automatically. As of right now, Opendoor hasn't made any official announcements. No new SEC filings, no press releases, and the executive team's been quiet, so this move isn't based on company statements or speculation. It's purely market psychology, analyst revisions, and algorithmic activity. That's what's pushing it higher right now. Let's talk technicals. The stock is sitting around $7.47, right below a key pivot level of $7.48. Bulls want to see a clean close above that number. If it holds, the next resistance is around $8.07, while support sits near $6.52. Opendoor is currently trading above its 10-day moving average, which shows short-term strength, and the next big target is the 50-day moving average. That's the one traders often treat as confirmation of a real trend reversal. If momentum stays strong, it could test that level as early as tomorrow. Now, looking at the options market, the bias is definitely bullish. About $10 million worth of call options have been traded compared to just $1.2 million in puts, and almost half of all options volume today is on the bullish side. In the secondary market, some big-ticket transactions over $100,000 have shown both buying and light profit-taking by institutions, but overall, the dark pool data indicates hedge funds are positioning long. And that's usually a signal of quiet accumulation, even if short sellers are still active on the other end. So what's the takeaway here? This isn't just hype, but it's not a guaranteed breakout either. What we're seeing is a combination of improved sentiment, analyst upgrades, and algorithms amplifying the move. It's the perfect recipe for volatility. If Opendoor can close above 7.48 cents and hold above its 10-day average, we could see this momentum continue into the mid-$8 range. But if the broader market pulls back or inflation data later this week disappoints, expect a sharp retrace. Still, for now, Opendoor looks stronger than it has in weeks, and traders are clearly betting on that strength to hold. The company's been through a rough ride post-earnings, but right now it's showing it still has some serious fight left in it. So, what do you think? Are you buying Opendoor, holding, or waiting for another dip? Drop your thoughts in the comments below. I'm really curious to see how everyone's reading this move. Some think this is just an analyst-driven pop, others believe it could mark the start of a bigger recovery. Whatever your view is, I'd love to hear it. And as always, this video is for educational and entertainment purposes only. Nothing here is financial advice. Always do your own research or consult a licensed professional before making any investment decisions. Thanks for watching, stay smart, and I'll catch you in the next one.